What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be taking a look at Micron stock because the stock fell about 5% today. But the good news is that the US finalized a $6.1 billion subsidy for Micron to continue making chips in the United States, specifically in Idaho and in New York. So that is the good thing. Now, there are other chip companies that got subsidies as well. Intel, I believe, was the biggest. I think it says, I forgot the exact amounts, but Intel, I believe, received at least 6 billion or 7 billion dollars in subsidies, even though Intel is struggling a lot more than most of these other chip companies. But with that being said, Micron is down 4.5%, 5% today. And in the last year, the stock's been all over the place, but last 5 years, it's up about 100%. So there's definitely volatility in the stock. And then the last couple months or so, it's kind of just been hanging around this $100 mark, and that's all that's been going on. So, market cap of $109 billion for this company. The thing I don't like about this company's financials right off the bat is how inconsistent they are. So, if you look at the numbers, it bounces all around, right? I mean, one year they do 30 billion in revenue, then they do 15 billion. Now they're back up to 25 billion, and it's just it's hard to predict a company's valuation when you have numbers like that. Same thing with net income. They lose money 2023, 2024, it's 700 million. 2 years prior, it was over 8 billion. So it's just very hard to predict. It's very hard to give a fair valuation when a company's net income fluctuates that much. The debt to cash rate ratio has gotten worse over the last couple of years. We're looking at over 13 billion in debt and 8 billion in cash. So not a great situation there either. Then we have return on capital of only 2% for 2024, which is not good. And so there's just a lot of weird things going on here. If we want to look at the PE ratio, we can see that, again, it's very hard to predict. It's very hard to get any sort of actual measurement or substance out of these numbers. So let's go over to price to sales, and we'll see if we can get a better idea through the sales numbers. And let's see what we have here. Current price of sales are roughly on the more expensive side of things, really. I mean, maybe if I was paying 2 to 2.5 times sales, it'd be more interesting. And so let's run those numbers. And the good thing though is look at the EPS expectations. 8.9 this year and then nearly 13 the following year. So if those numbers happen, then sure, this could be a different story for the stock. And we might be looking at, who knows, this stock could be $300 next year, really, if they're putting up $13 EPS. It comes down to the consistency though, and how much they are growing. So right now they have big revenue growth numbers, 52% and then 21%. But how I said, it's when it can drop by 50% a year later, why pay a premium for that company then? But let's just say we're going to pay 2.5 times. That might be a fair price to sales. Well, that puts the valuation at $115 billion, let's say. And right now we're at 109. You see, so it's not really like, I don't know. That's roughly what a good valuation would be. Um, anything over a three, I feel I would think that's overvalued. So let's go back and do the numbers again. 3 times 46 is 138 billion. So I don't know, maybe we see a 20% jump from here going into 2025, but I don't really see a the subsidy from the United States is great, but and the expected EPS jump is great too. But I don't know. I mean, if 2027 or something, the EPS drops to 6, okay, well then the stock's gonna be back at where it is today. And it's very like a cyclical business where it's hard to predict. You're kind of gambling a little bit. You don't know, year after year what's going to happen. I like a more consistent business. So at the moment, I am not too interested in buying Micron stock. But thank you for watching. I will see you in the next video.